For my final project, I decided to choose stock analysis because in the future, some way or another, you are going to get involved in stocks. Even if you don't, you're going to hear about it from someone because it is how we base our economy, and if we hear that the stock market crashed, and then we know it is going to be a bad time until it rises again. But this project is going to show you how to compare monthly stocks from one another. After all, if you're going to put your money into something, you should at least put some effort so you can make a profit and not go broke. To do this, I gathered data from 3 different shoe/clothing brands, Nike, Puma, and Under Armour, because they all sell similar things and also range in size. Next, I made a pros and cons list of each company to give you an idea of some strengths and weaknesses of the company. Lastly, I put it into a histogram to give you a visual of each stock returns look like. So let's get started. First, let's look at the pros and cons of Nike. Let's start with the pros. Number 1. It has a strong global brand. Nike is one of the most recognized brands in the world, which helps it sell products constantly. Number 2, it's had a solid financial history. Nike has a long track record of making profits and staying financially stable. Example, during many economic downturns, Nike still managed to recover quickly and stay consistent. Number 3 is the innovation and marketing power. Nike invests heavily in new technology and strong advertising. Nike ads with famous athletes help boost sales and keep the brand relevant to younger customers while always coming out with the latest new trend. Number 4, many customers buy Nike's products repeatedly because they trust the quality and style. Example, someone who likes Nike's running shoes often sits with the brands for years, which keeps sales steady. Now let's talk about the cons. Number 1, it has high competition. Nike faces strong competitions from Adidas, Puma, Under Armour, and new brands. Example of this is if Adidas releases a popular shoe line, Nike sales might drop. Number 2, sensitive to global supply chain issues. Nike depends on factories overseas, which can be affected by political issues, shipping delays, or rising labor costs. Example of this is if a major factory closes or shipping costs rises, Nike could struggle to produce enough shoes. Number 3, dependent on customer spending. When the economy is weak, people buy fewer shoes and clothes. Example, during a recess, families might skip buying new sneakers, which hurts new profits. Number 4, reliance on trendy products. Nike's success depends heavily on staying trendy and releasing products people think are cool. Example, if a new shoe line isn't popular or a fashion trend shift, Nike sales can drop quickly. For the next part, the reason why I chose the histogram to present my data because it is very easy to see and simple to visualize, represent the data, and see monthly stock returns. After using a histogram where X represents the amount of growth percentage-wise that Nike has had and how many times it has happened, it is also accurate because it shows data being divided into bins. The Nike histogram was also slightly skewed right, meaning that Nike has had more positive gains than negative. As you can see, the center and peak of my histogram for Nike was the section between, or the bin of 0.5 or negative 0.5% and positive 2.5%. This area shows stable returns. Because of this, also next to it, between the next highest is between 2.8% and 6.2%, showing that Nike is very reliable, with it also being skewed right, like stated earlier, showing that on average it has positive monthly returns. Next, let's talk about Puma. Puma's pros are that it's a growing global brand. Puma is one of the top sportswear brands worldwide, and its popularity has increased in the last decade. Example, Puma has become more common in the major sports stores and is expanding into new markets like basketball and streetwear. Number 2, it has competitive prices. Puma products often cost less than Nike or Adidas, which attracts budget-friendly shoppers. Example, a student might choose Puma because the sneakers cost $20 to $40 less than similar Nike shoes. Number 3, expanding market in sports and fashion. Puma mixes sportwear and casual fashion, making it into multiple markets. People buy Puma not just for the sports, but also for everyday outfits, giving the company more customers. Number 4, Puma has a strong celebrity and athlete partnership. Puma works well with well-known athletes and celebrities, which helps boost sales and keeps the brand relevant. Collaborations with stars like Rihanna or top soccer players increase attention and demand for new product line. Now here's the cons. Number one, it has a high/smaller market share than competitors. Puma is strong, but Nike and Adidas dominate the industry, making it harder for Puma to grow quickly. Example of this is when Nike launches a big campaign, Puma sales can get overshadowed. Number two, it has lower profit margins. Because Puma sells at a more affordable price, it makes less profit per item. Even if Puma sells a lot of shoes, it won't earn as much as Nike per pair. Number three, the supply chain and manufacturing risk. Like many apparel companies, Puma relies on overseas factories which can be affected by economic or political issues. A factory shutdown in Asia could delay shipments and hurt profits. Number four, limited presence in the U.S. market. Puma is popular globally but has a smaller market presence in the United States compared to Nike and Adidas. Since the U.S. is one of the biggest sportswear markets, selling less than there can limit Puma's overall growth and make it harder to compete. Next, for the visual, here is the histogram based on Puma's monthly stock analysis, where X represents the growth percentage of Puma's growth, but both positive and negative. The histogram highest been is between -7% and 1%, which shows that Puma on average tends to not break even, but is also skewing right, which means that Puma often has positive gains. Also like to notice that Puma has had one -89 through -81% decrease in profit. Lastly, let's talk about Under Armour. Under Armour is known for high-performance athlete gear, especially compression clothing. Many athletes choose Under Armour for training because the materials are lightweight and durable. Number two, growing international presence. Although there is smaller globally than Nike or Adidas, Under Armour is expanding into Europe and Asia. More Under Armour stores opening overseas helps increase brand recognition and sales. Number three, it has a strong digital fitness platform. Under Armour owns fitness apps and data platforms like MapMyRun, that connect with customers. People using these apps may buy more Under Armour products because the brand stays part of their workouts. Number four, they have a strong focus on innovation. Under Armour continues to develop new materials and performance technologies to improve athletic gear. Example, their heat gear and cold gear fabrics help athletes stay comfortable in extreme temperatures, keeping customers loyal. Now let's talk about the cons. First, the intense competition. Under Armour compete against giants like Nike, Adidas, and Puma, making it hard to grow market shares. When Nike launches a new basketball shoe, Under Armour often gets overshadowed. Number two, Under Armour's had past financial struggles. Under Armour has had years with declining sales, lower profits, and leadership issues. Example of this is that the company once had to cut spending after several weak quarters, which damaged investor confidence. Number three, smaller brand appeal. Under Armour is not as popular in fashion or lifestyle wear as Nike or Adidas. Many teens and teenagers buyers choose shoes mainly for style, and Under Armour sells fewer lifestyle products. Number four, reliance on North American sales. A large portion of Under Armour's revenue comes from the U.S., making it vulnerable to economic swings. Example of this is if U.S. shoppers reduce spending during a recession, Under Armour feels the impact more than brands with stronger global sales. Next to the histogram. The histogram with X representing growth percentage for Under Armour, broken down into different bins. As you can see, it is skew left, meaning the average is negative monthly stock return. Its center bin is also ranged from -7% to 0, meaning it loses more than it gains. Things to keep in mind before finally making our decision on which to invest in. First, the average return of the company. The centerpiece of the histogram, which tells you the most of the time each month the stock will finish and what bin it will fall into. Second is if the histogram is skewed left or right. This tells you on average if the company either gains positively or negatively if much. Third, potential to grow. Which of these companies has the most room to grow and be innovative? And which company has already made it to the top? Fourth, variation. Stock varies widely sometimes, so it is very important to make sure to keep in mind how consistent stock is to make sure it is consistent in going positive. Now for the conclusion. To pick the best stock, let's first look at which way each graph is used, with Nike and Puma both being skewed right, on average positive monthly stock jumps. But on the other hand, Under Armour is skewed left, meaning its average a negative monthly stock jump. So this eliminates Under Armour. So now it's just between Nike and Puma. Let's first both look at the variations in the average standard bins. The variation within Nike is not very big. There are not many big negative jumps, while there's not also any big positive jumps, meaning that Nike is very consistent. Puma is also very consistent too, but with a big outlier of 1 month having a negative 81% slash negative 89% bin stock decrease, meaning there was a huge loss of profit. Overall, you can't tell which is better from this, so let's look at the central slash average bins of each, with Puma being a negative 7 slash 0% and Nike having a negative 0.5 to 2.8 positive percent, which in the end is why I would personally favor Nike, because it overall had a better bin, is just more consistent than Puma and Under Armour. While Under Armour and Puma do have more room to grow in the future, but currently Nike is more consistent and it is way too much to overlook. Thank you.